best in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network, and it's Monday. That means we've got John Rubino of dollarcollapse.com. You know him well, co-author of The Money Bubble, and looks like it's all coming true. John's latest article, Fed smacks dollar, Europe and Japan lose hope. And John, how are you?
I'm all right, Kerry. How are you?
All right. So summer is officially over in your neck of the woods, huh?
It is. It is. We had some frost on things a couple of mornings ago. So anybody who's still trying to grow tomatoes up here in Idaho is scrambling to bring them all in.
Yeah, I wish we had some frost here. It's still been they say 5 degrees warmer than normal in Florida, so it's been quite hot here. But hey, I guess hopefully it'll cool off soon so I can hit the trails on my bicycle again.
Yeah, it'll be gorgeous soon enough where you are, so the people out here are going to be envying you within a month or two.
Yeah, and things haven't been cooling off. They've been cooling off for the stock market for sure, but the dollar has been heating up a bit as well, huh?
Yeah. Well, here's what happened in the last couple of, I guess, months. I was going to say weeks, but it's spread out a little more than that. The dollar started to get stronger as the U.S. Fed neared the end of quantitative easing, and when it was going to completely taper and not buy back any more government bonds, you saw the dollar go up. And that functionally is the same thing as interest rates going up. It slows down the economy in general, and it makes debts more onerous, et cetera, et cetera. And so what we're seeing now in the stock market is the typical taper tantrum, basically, is what you have every time the Fed tries to scale back one of its quantitative easing programs, is the stock market tanks. And that scares the guys in charge, and then they come back with a new quantitative easing program. So we're seeing that again. And it's been pretty brutal for the last couple of months. Volatility has spiked in U.S. equities, and we've seen some up 200-point days, but more down 200-point days. So generally, fear is creeping back into the market. And you also saw the VIX volatility index, which is a measure of basically fear in the stock market, really spike lately. So now the question is this the beginning of a really serious market crack here that takes U.S. stocks down 10 or 15 or even 20 or 30%? Or is it just a tiny little squiggle that will be corrected soon? And, you never know until it's over which one you're looking at. But it definitely has the attention of everybody. And one thing that a stock market correction does is that it makes everybody start focusing on the problems that are out there. Because while equities are going up, it's very easy to ignore the rest of the world, because if stocks are going up, then things must be okay. Those finance guys who really know what's going on are still buying, so they must see the world as basically a benign place, no matter what the occasional scary headline might say. But the opposite is true when equities start going back down. Everybody starts looking around for reasons why, and then they find plenty. And lately there are more than usual. We got this virulent fundamentalist Muslim group taking over Iraq right now. ISIS is actually threatening Baghdad. And Baghdad is where we have our embassy, the U.S. Embassy, which is really a small city. It's one of the biggest complexes that have ever been built anywhere in the history of the human race. And it contains all kinds of, sensitive equipment and records that we don't want anybody to have, and a lot of U.S. personnel. So let ISIS actually threaten Baghdad, begin to encroach on the edges of the actual city, or start shelling the city or whatever. And we're going to get involved in a big way. We'll go from the occasional drone strike on a truck to boots on the ground in force. And that'll be a whole different story, because then we're talking about another $1 trillion or whatever to stabilize a country that we shouldn't be involved in the first place, and that is only in chaos because we got involved a decade ago. And then while this is happening, we've got Ebola, a very, very nasty, formerly tropical disease, now spreading to the rest of the world. There is somebody in Texas who has it, and in Spain, some healthcare workers who were, helping out with somebody who had Ebola have contracted Ebola. And so clearly our protocols for dealing with it aren't perfect. And there's real fear. I have a friend who's a biotechnologist who just terrified me the other day. He just sat down and told me why he thinks that 1 million people are going to die of Ebola in the next year, because it's actually much easier to spread than they tell us. And our ways of dealing with it, especially in the West, because we aren't experienced with it, are really inadequate. And so get ready for something serious. And he advised me to get some old clothes with good gloves and duct tape, so I can duct tape my shirt sleeves to my gloves. And at some point he says, I'm going to have to dress like that to go shopping and then come home and burn my clothes. He scared me. And he's a guy who knows. He's a biotech guy. Anyhow, that's another thing that's going on. And then you've got, of course, the Federal Reserve tightening monetary policy. That's what tapering is, really. They say we're not going to be so loose in the future. Well, that's the same thing as tightening. They're contracting the amount of money that they're pumping into the system at a time when the system basically requires continuous infusions of new cash because we're so indebted. As Doug Nolan at Prudent Bear says, it's inflate or die. And these guys have decided to stop inflating. So we're going to see if we actually die when and if they stop. And you know that once the effects are felt and we have a slowing economy and a tanking stock market, they'll come back with an even bigger version of QE, but we have to get from here to there. And so that's what we're going through now. And meanwhile, it's October. This is when you normally have your stock market crashes for whatever reason. They seem to occur in this month. And so people who are experienced in equities and who know a little bit about financial history know that this is a month to be wary of. So here we are. Stock market is starting to tank and it's October. So that has people worried. And meanwhile, you got Europe and Japan already dropping into recessions that could easily turn into depressions because they're so over indebted that they really can't handle deflation, because that makes your debts even more onerous. And if your debts are already debilitating, then more debilitating is a recipe for disaster. So anyhow, we've got all this stuff going on out there. And now people are starting to focus on it for the first time because they can't just look at the stock market going up and assume everything is all right. So we're entering a very interesting time when it's now easy to fixate on problems rather than opportunities. And so fear can become the dominant emotion in the markets very easily. And we don't know if that's what's definitely going to happen, but we're seeing the early stages of that process. So the question is, can the governments of the world do something to short circuit that process, or does it play out? And if it plays out, what happens to the leveraged speculating community, which is basically the whole world right now? Every major government is leveraged to the hilt. All the central banks are building up their balance sheets and are, technically insolvent if you look at the value of the bonds they bought in the past. Versus their minuscule amounts of capital that they have on hand. You've got a lot of new things to worry about that aren't on people's mind yet, but that could come to the surface as this thing progresses. So interesting month ahead of us, Kerry.
Hey, and did you see the yield on the 10-year, by the way?
Yeah.
2.29%, which tells you that loan demand is basically in the you know what.
Well, it also tells you that the whole world is terrified and they're putting their capital in the final safe haven, the one thing that's left that you can buy and have a reasonably good chance of being repaid, and that is U.S. Treasury paper. And of course, that's a myth.
Yeah.
Of course, the U.S. Treasury can pay its debts, but it can't control the value of the currency in which it's going to pay its debts. So sure, all these people are going to get paid, but what they can do with that currency is questionable. When the time comes.
Might be suitable for wallpaper or toilet paper or ingesting your favorite drugs through it, but probably not much else.
Yeah, so that's the next stage of the process here is, okay, we've got all these problems, but the dollar is this rock solid safe haven place where we can go to hide. Well, at some point that's going to be proven to be untrue, and then all hell breaks loose. That's when things get really crazy. So whether these things follow sequentially and close together in time, or whether there's a big gap in between and the dollar stays strong for a long time and U.S. interest rates stay low, that's anybody's guess. But at some point, a currency crisis is out there. And that's the point when the game ends, because that's the final hiding place. At that point, there's nothing left in the world of financial assets that you can point to as rock solid and guaranteed store of value, and then financial assets will be liquidated, and the proceeds will be used to buy hard assets, and that's when you'll see precious metals go through the roof and farmland go even higher, and forget about London penthouses. They're going to be so out of reach of anybody but the super rich. So that's our future, and right now we're seeing the early stages of what it will look like when we head into that future. We don't know if this will be the time, but it's safe to say that this is how it'll look and feel when the time comes.
Yeah. Isn't it great?
Well, it is if you already own those hard assets, and you're not in a place where people are flying in who have Ebola and wandering the streets,
Yeah. It sounds like the four horsemen of the apocalypse to me. But I did get a somewhat distraught email from somebody. I have to find it. It was really, because I did a commentary on Martin Armstrong's article last week about what's about just that where the tree is falling basically, and which way is it going to fall? Is it going to fall to Mad Max, or is it going to fall to a new world kind of thing? And hey, up next, we'll talk about this email and what he had to say. It was quite interesting on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week, the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
Hey, if you just tuned in, just started listening, it's Monday with John Rubino of dollarcollapse.com, just talking about this email. Can't locate the exact email, so have to be a little patient with me. I'm going from memory here, but he says, on the one hand, you've got people telling us to buy gold. On the other hand, you've got Martin Armstrong, who says the price of gold is going to collapse to $650 to $700 an ounce, and you got a carnival barker atmosphere here. And here it is. My name Daniel. You read and commented about a blog Martin Armstrong wrote, which was picked up by Zero Hedge and lavished lots of praise upon him. In fact, you said he had the best forecasting track record of any of your guests. You also commented on your experiences of making assumptions and the pain of finding out those assumptions were wrong, and that these lapses in judgment have cost you lots of money. And I should say in the short term or medium term. And I think that's a common experience, especially with regards to investing by the retail investors. I'll raise my hand, me too, and then I'll skip it over. But he says, but I do find it a bit concerning and disturbing how you can spend an entire segment glorifying Martin Armstrong and his forecasting abilities, and in the next breath be pumping your audience to go out and buy more gold and silver from your current sponsor. I could go on, but I won't. The reason is that I have as many faults, maybe more than you do. So this isn't a personal attack. It's a plea. When I hear Kerry Lutz being Kerry Lutz, there's a reason to listen. And when I hear somebody carnival barking, it's time to change the channel. So here's the point, though. Nobody knows exactly what steps this thing is going to play out, John, right? I mean, but we do know the final denouement. We know how it's going to end, but we just don't know how it's going to get there, what steps it's going to take. Maybe the dollar will go to 125 on that index because the euro will collapse, but that doesn't make the dollar any better. And, it doesn't make the world financial system any more stable. And the reason why I like Armstrong is just that he's been spot on, but I don't necessarily agree with all of his conclusions. And if gold goes down to 650 to 700 an ounce, it's because the deflation and all of the banks have collapsed, and the purchasing power of your ounce of gold is going to be so phenomenal. You'll be buying 5,000 square foot houses with 5 ounces of gold. That's what it comes down to. And your silver will be a phenomenal source of savings. So it's not a reason not to buy it just because he's been right up to now about the stock market and all that. Because what'll happen is purchasing power of the dollar and gold and silver will just be through the roof, right?
Well, the thing about bubbles is that they're really easy to identify, but it's really hard to know when they're going to end. So in the case of today's money bubble, you're right. It could go on as is for a while longer, or it could blow up right now. Next week could be the end of the whole thing, and there's no way to know. When the snowflake hits the mountainside and which snowflake it's going to be that causes the avalanche. You just can't know those things.
Yeah.
So the only way to prepare for something like this is to kind of ease your way in over time. If you think that gold is eventually going to be $10,000 an ounce because the world's governments have no choice but to devalue their currencies to get out from under their debts, then you ease into gold. If you think farmland is going to go up, which it has been and probably will continue to, then you find a way to buy something like that and ease your way in. But you can't know when it's going to happen. And the flip side of that is that when it does happen, it'll happen pretty suddenly. It could be something that happens in Asia while the U.S. markets are closed, and we wake up to a completely different world.
Yeah.
So there's no way to time stuff like this. All you can do is gradually move into the side of the global economy that should benefit, which is probably real assets in the long run from the aggressive kinds of inflation that have to happen at some point. But you're right. In the meantime, you risk the deflationary scare that comes first. Mm-hmm. Like back in 2008, when the housing bubble burst and U.S. stocks started to tank, that was a hugely deflationary year. Gold and silver got crushed. The price of basically everything went down. But the world's governments responded to that with absolutely unprecedented experimental monetary policies where they guaranteed tens of trillions of dollars of debt around the world and pumped tens of trillions of dollars of newly created currency into the system. And within a couple of years, we were back in an inflationary environment where hard assets were going through the roof. And there's no reason to think that, it's completely likely that we have a huge deflationary scare here because this much debt is naturally deflationary. And we're seeing it happen in Japan and Europe right now, where they're basically being crushed by their debts. Mm-hmm. And they are going to have, if they're not already in a deflationary scare, they're going to have one. And the U.S. is going to be pulled into it, obviously, because we can't function as a growing, stable economy when the rest of the world's in chaos, right? So we'll get sucked into this. So Yeah, we could have 1 year that's like 2008 that fits Martin Armstrong's scenario very easily. Where we have this huge deflationary crash in multiple markets around the world. But I think the central banks of the world, armed with unlimited printing presses as they are going to react to it just as they did in 2008, only on a vastly bigger scale. They're not going to take any chances this time. So if $10 trillion didn't save us, $50 trillion is what we'll try this time. It's all just numbers. You type it in, you hit send if you're at the Fed, and that's all you had to do. All of a sudden, Goldman Sachs has an extra $1 trillion on its balance sheet. And
right.
They'll do that again. Yeah, they'll do that again. But yeah, the timing of this is completely impossible to predict.
Yep.
And so you don't know whether you'll wake up in some morning next year and gold is $800 an ounce or $5,000 an ounce. Either one of those is completely possible in a world that's chaotic.
Yeah, and either way, the purchasing power of gold and silver is going to be higher, no matter how you cut it.
Yeah,
and that's what you need to know.
That's right, because it is cash.
Yep.
And although that's something that there's disagreement out there about whether gold is actually money, but it's functioned as money for 3,000 years, and it still has the store of value function, even if it's not a medium of exchange. And money will flow into it, so it will behave in a really serious crisis like cash. So, which means it'll go up in value in a deflationary crash at some point in some way,
just like it did in the 30s.
Yes.
They had to do it to reset the dollar and all the other currencies. There's kind of no other choice. So, regardless what Armstrong says, and, I think he's been spot on, flow of funds. He says, if the Fed starts raising rates here, and he believes they will, I'm not so convinced. That's going to lead to a flow of funds from Asia, and the Asian central bankers are real nervous about it. Just like right now, the price of oil sinking, Putin saying, oh, maybe we'll take the troops out of Ukraine. I don't know what's going on here, but somehow somebody's working behind the scenes to make all this happen. So you just have to be prepared.
Well, a stronger dollar is functionally the same thing as raising interest rates. So we're seeing basically that happen right now. And yeah, the whole rest of the world is in chaos now with the dollar going up like this.
Yeah.
And the U.S., let the stock market go down by even 10 or 15%, which is completely normal in the scheme of things. We've gone longer than usual without that kind of a correction.
Yeah.
And see what that exposes in the U.S. What does that do to the junk bond market, which has boomed lately? It's already correcting, but there are air pockets under the price of most junk bonds right now.
Oh yeah.
And what does it do to derivatives? There are currency derivatives out there, interest rate derivatives. In going on $2 quadrillion worth of them when you add them all up.
Yep. And
what do they do?
Yep. That's it for this week. So we will talk to you next week. Find John's work at dollarcollapse.com, and you'll find the link on financialsurvivalnetwork.com. Sign up for our newsletter. Make sure you go to the site. You'll find the latest alternative financial news there from hundreds of sites across the world. And, as well as John's site, Dollar Collapse, and, Carl Denninger, and so many others that you read. One-stop shopping. Take a look at it. And John, till next week.
Thanks, Kerry. Talk to you then.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.